welcome to Pro Trader Strategies Market Commentary for Monday, May the 18th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic and geopolitical environments, how that impacts the overall markets with my market analysis. Well, I do the same stuff in these daily market commentaries, but I layer on top of it some option strategies I find based on that market analysis that we derive from the economic and geopolitical stuff out there. All right, so without further ado, let's get on with that economic data. It's a Monday, so yes, we don't have a whole lot of economic data, but we do have the NAHB, which is the National Association of Home Builders Market Index. And that was expected to be 35. Well, it came in above that, which is a bit surprising for me, coming in at 37. So slightly better, not great, don't get me wrong, but it is better than what we would expect. And that would be something that I would have thought would be a little bit worse off for the environment we're going through with the layoffs and everything else. The housing market, banks not really being too thrilled about giving out loans, and seeing some mortgage delinquencies start to skyrocket here as of lately. All right, so let's talk about the overall markets. Well, the markets are starting to see the economy's opening up. Wisconsin kind of going full boat. I think the bars were, we used to say asses to elbows. I don't know if I'm really supposed to be saying that, but that means you are jam-packed tight, right? Like we were on the floor, where they are starting to open up there. Las Vegas is starting to open up as well. Yes, we are starting to see a little bit more of those counts start to spike a little bit in those areas that are opening up, but we are also seeing a lot more testing. So is it that it's the testing or it's the opening up? I'm not really quite sure at this point. It seems like it might be a mix of both. All right, so with that being said, we're starting to see crude oil start to move a little bit higher. At one point today, it was up over 10%, which doesn't seem like a lot, but yes, it is a big move. And I talked about this. Once we got above that $26 a barrel mark, that's where those shorts were going to really start to feel like they were on their heels and look to try and cover. I think that's a lot of this. Yes, there is demand starting to pick up a little bit. Some of the big manufacturers like Ford are starting to open up their plants. Elon Musk is trying to get his plant opened up as well in California. I think he's scheduled to be able to open up very soon. So those types of manufacturing are big users of crude oil. Yeah, maybe not so much Elon Musk as much as the rest of them, but yes, there are a lot of other manufacturers out there that are going to be using a lot more of crude oil, whether it's the distillates and or polypropylene, which is, goes into the or is a plastic which is created or derived from some of the byproducts of crude oil in the distillate process. So crude oil making a big move today. Gold coming off by about $23. Again, we talked about this. It starts approaching those all-time highs, and we're going to start seeing some weakness, and a lot of that has to do with the equity starting to move higher. Volatility in the dollar is also affecting that as well. But mostly it is a flight to safety, a safe haven asset, if you will. And once the market starts really starting to skyrocket like we're seeing there, we're going to start seeing money shifting to different sectors of the investment spectrum. And then we sit here and look at the bonds. They are off by almost 2 points, just shy of 2 points. Again, still stuck in that range I've talked about, somewhere right in between this 79-ish, really 78, 178 handle, all the way up to about 183 is really where the sweet spot for bonds are. So they start getting a little bit too overdone to the upside. We're going to start seeing that market want to pull back because interest rates just incredibly low once we go above 183. But we find a lot of support down here at this 179 handle, and we're going to continue to see that, I think, despite the fact that we're below the 5-day simple moving average here and below the 9-day, which get below the 9-day, that's short-term weakness, and get below that 50-day, and that's showing a little bit more long-term weakness. But having said that, the bonds are the bonds, and I don't think they're going anywhere anytime soon, especially for the type of economy that we are about to really see the veil lifted off of with the coronavirus and some of these unemployment numbers and stuff like that going forward. All right, so VIX coming off. Well, that's expected, right? We see the VIX coming off. Why? Because we have the Dow Jones Industrial Average almost 1,000 points higher on the day, and it is almost unabated to the upside. There are a lot of rumors out there that we have a lot of people are making some great strides in coming up with a antivirus and some cures for this possibly, or at least ways to mitigate some of the ill effects due to the coronavirus. So that is a big move happening in the equities based on some of those rumors we got over the weekend. We can see the Nasdaq up 227 points as well, pushing up against that 93.25 area, which is an area of resistance we've seen not really be able to break through there. One thing we used to say on the floor is third time through. You heard me say that about Walmart. Well, that didn't work out with Walmart so much, but it might very well here with the Nasdaq. We break above this 161 Fibonacci extension, and we could really start to see some explosion to the upside. As you know, if you were a short and you didn't get in or get out of your shorts, you're going to really be thinking you need to start covering above that level. Also, something to note, we talk about this when the 50-day crosses below the 200-day, that's a little bit more long-term bearishness. Well, we're going to get this peeling back above here relatively shortly if we continue to see some of this strength going on in the Nasdaq. So that would be a long-term bearish trend happening again. So we'll keep our eyes out for that. It would have been a very short crossover there. Here we go with the mini S&Ps up 100 points on the day. Really back in and around that area I've talked about, where I think that there is going to be showing a lot of value built up before we start moving too much higher. And when we're seeing this, we're talking about this little area right in here where we're going to try and fill in that little gap between those 2 points of control. The yellow line is the point of control for the time where we spent a lot of time. That's price acceptance. And then the volume where people are exchanging is right up above this area at 3,000 in the E-mini S&Ps. And you can see that lines up with that 50-day moving average as well. So I think that we're going to see that kind of start to toggle back and forth there. We might peel above that just a little bit once we break above 3,000. But I think that we are far and away from the all-time highs here in the E-mini S&Ps, at least for the next few weeks that we're looking at. All right, here we go. Overnight, you can see it was just jubilation going crazy with a lot of these rumors coming out. And as you can see, we're getting a little bit of a pullback here, but there was no attempt whatsoever to flush out these longs from the overnight, and that is extremely bullish. And I've talked about that before as well. You get this overnight inventory that long, you kind of would expect the day session to try and flush those guys out if it was relatively neutral, but there is no attempt to get those guys out of those long positions today. All right, so let's talk about a couple of things that's been going on in my portfolio. You guys remember Facebook? Yeah, well, Facebook, I had a lot of things going on in here, and that had to do with those trades I was doing. And when the market started coming off, I've talked about this. People are going to be spending a lot of time at home, and where are they going to focus their energy? Well, a lot of people have been on Facebook, right? Yes, they are going to lose a little bit of money on some of their advertising as people cut back on some of that spending. That's one of the first things people or businesses do, is spending on advertisement during these types of economic pullbacks. Well, I had sold the March, what was it? The March 175 puts. I sold the 175 puts in there for about $1.95. Well, as you can see here, I'm going to slide this over just a little bit here so I can pull up a, I don't want that, I want this here. Let's pull this up so I can start drawing this in so you guys get a better view on what we're looking at here. So let's get on with it. In this trade here, I put that away. So I had sold those March, I'm going to draw it like the normal, March 175 puts, and I collected, sold the 179 puts for about $1, what was it, $1.95. Yeah, $1.95. Well, you can see we got this pullback, and I did that on the February 27th. So that would have been like right around here. So sold those 175 puts. You can see the market just free fell against me. And I also added in some March. I sold the 145 puts in, or 142 puts in there. And I sold those for about $1.91. $1.91. So I've collected, let's call it close to $4, right? Just slightly shy of that. Well, I got so this ended up being stock. So I'm now long stock at 175, all right? These expired worthless. So I got the expire for 0. So I got to keep this collection. I still got to keep that collection. That overall lowered my basis to around 170, 170 something, right? Or 171.04, let's call it. So all of that being said, didn't get put the 142s, although I was tested on that down here, but you can see on the last day we got a bit of a peel to the upside. It closed just above those 142 puts, but I got put the 175s. And continued to try and lower my overall cost basis with this trade. I sold immediately then on the 12th. I sold on the 12th during this time here when I thought I was going to get put all of those stock in and around there. I sold the April. I sold the April sold the April 200 calls. So I sold the April 200 calls for not very much money, 96 cents, not compared to those puts. And I did that for half of what my overall position was between the 2 March calls. All right. So what I was looking to do is lower my overall cost basis on these 175 puts where I'm long that. I did it for about half of the position there and then ramped it up a little bit. After I rolled out of these, I closed that. That was a credit there, and I bought them back for 15 cents. So that was a 15-cent debit. All right. So overall, about 81 cents extra into my pocket. So now I'm well over $4, lowering that overall cost basis. And then went into the April, went down a little bit further and sold the 190 calls in there for an additional 35-cent credit. So 35-cent credit there, again, lowering my overall basis on that, and was able to cover those for 6 cents. So I bought them back for 6-cent debit. All right. So, I've got to add that in, only 29 cents on that trade there. And then I sold the May, rolled it out in time from the April to the May. So I rolled, basically, I did a roll here out to the May and sold the 200 calls. So I rolled them out in time and up and away. And this one, when I did these, it was for a full cover on the trade, rolled it out in time to the May. Those got called away from me. So I'm out of Facebook, all right, because it got called away from me on Friday when they all expired. So ultimately made $25 on the move from where I bought the stock, right? So that's out 175 to 200. I'm out of that. But overall, in between, I lowered my overall cost basis on these by just slightly less than $170 a share. So that was a very nice trade, despite the fact that we got that massive sell-off and pop back. That's how we do it. I wasn't looking to be in Facebook for the long run, but that's what we do, and we can see we have an opportunity to take advantage of in the overall market. So that worked out quite well for me in Facebook. Now, the other thing that we need to talk about here is EA Sports. And let me pull up this EA Sports trade. Let me sync this out of the way. EA Sports. Now, I've played this where I ended up doing a ratio call spread, right? I had gotten long this EA Sports at about $89. I had sold some puts in there, and I sold the puts in there right around in the 12th. So EA Sports sold the 89 puts. You can see they were definitely below that at expiration. I got put that stock at 89. Now we've made this massive move. I did this based on, I think they were going to do very well during this type of coronavirus situation, and sold those 89 puts in there originally for about $1.13. So trying to lower my overall cost basis on that trade worked out quite well. I ended up selling some calls against it here and there, and then I did that 1x2 long call spread where I got long the 115 calls on the 14th. So on the 14th, this is where I sold those. If I can line it up right there. So I bought the 115 calls and then sold the 120 calls twice for every one that I did the long calls on. Now I did that for a credit of 62 cents. Market rallied up quite nicely, as you can see here, and basically on Friday I had those short calls expire worthless, and I collected over $4 for those. Collected what was it, $4.81 on those two calls for every one that I bought. That was where we were able to get that nice collection. I would be happy to have some of those EA Sports called away from me at 120. Probably still would, to be quite honest. But having said that, those expired worthless. The long calls that I had on at 115, I took into my account. So now I am dollar cost averaged on those trades. I bought them at 115 and at 89. So my break even now on the dollar cost averaging is $95.50. Still well up and away from where we were before, so that worked out quite nicely. And I might cover some of those EA Sports on that at the 115 level if we get a nice move back to the 120s. So going to keep most of my position in there, but just to know, I added a little bit to my EA Sports on that dollar cost averaging. All right, so that's all I got for you guys. The reason why my break even is a little bit at 95.50 is because I had on a position and I only was covering about a third of that with that move there. If I was long, let's just say if I was long 300 before, I did it as a 1x2, added another 100 to my position and was looking to cover 100 of that position if we made a nice move higher. All right. So if you have any questions about this or any of my trades, please let me know. These are not recommendations for you guys. I'm just talking about how we work through these trades and how we try to lower our overall cost basis. I'm not trying to tell you guys what to do. I'm not trying to give you guys investment advice. I'm just trying to say these are opportunities we can take advantage of by using these different option strategies like I have. All right, so implement it into your portfolio in your own way, and keep in mind past performance of any trading system or methodology is not necessarily indicative of future results. All right, so if you can't take that, take it easy.